This is Bazaar Morning Call, broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
You're with us on CNBC TV18. This is Bazaar Morning Call. You're watching us live from the CNBC TV18 Motilal Oswal studio. This is a Thursday morning. I'm Sonia, and with me, as always, Nigel and Surbi. Well, things are not looking that great, folks. I mean, a profit-taking mode across the world, which I don't think is coming as a surprise to anyone, given the kind of rally that we've seen. But today looks like it's not going to be such a great morning.
But it's a beautiful morning, Sonia, here in Mumbai. It's a little more chilly. Yeah. You know, it's for Mumbai weather, I think it's quite pleasant as well. The markets, well, we'll take it in our stride, right? We did a little bit of excess maybe on the upside. Yeah. So maybe, evening out things. But let's see how this goes.
With our colors today, shades of pink and purple, I think we're trying to cheer up the market today. So,
I hope it works.
Doing a little bit. I hope it works. But yeah, as you said, cues are not all that supportive, even overnight.
Absolutely. I mean, the global setup is not looking good. So let's get straight to that, right? The markets across the board are in profit-taking mode. But as I said, some bit of money being taken off the table wouldn't harm anyone, given the kind of rally that we've already seen. But the big question is this the start of a downtrend? It's too soon to tell that. But for now, there were steep losses overnight, in the US markets. The Nasdaq, in fact, was down for the fourth straight trading session. There is now uncertainty on when the Fed will go ahead and cut rates. So on that timeline, a little bit of uncertainty, especially after what came through in the Fed minutes. There is a lot of economic data that's expected. So in that context, perhaps you could get more clarity on the rate cutting cycle. There's the private payroll report that's due later in the US. So keep an eye out on that. For our own markets, it looks like the rally is in pause mode, because in the last 5 days, if you map the trajectory, the Nifty is down about 1%. It still pales in comparison to the rise we've seen in the last many days, but there's been selling. So both foreign and domestic investors sold in the cash markets yesterday. FI sold about 700 crores, DI sold 860 crores. But two things to keep a keen eye on. One is the Nasdaq and the other is the US bond yields. Now, any signs of major correction over there will perhaps lead to a snowball effect in our own market. So on the Nasdaq, as I said, fourth day of a fall, and on the US bond yields, they've rebounded back to almost 4%. So just keep an eye out on these two internals and how they move from here. Earnings season also begins next week, so a lot of cues coming in there. This morning, you even have, Bajaj Finance that reported a very good set of numbers. The business update was good. So a lot of specific stocks in focus, but otherwise, it looks like it's going to be a slightly tricky morning, as has been the case for the last couple of days.
Oh, yeah, absolutely. I think it's going to be more about individual stocks today. And we saw that yesterday as well. I mean, the mid-caps managed to keep their head above water. But for the broader market, I mean, the larger, big indices, I think there are still a lot of questions out there. Yeah. And, a lot of that played out overnight in US market action as well. It's all about second-guessing the Fed now. And, that's the way of the market, because suddenly the market is really fretting over whether it'll get so many hikes or not. We ended December with the US market believing that we'll probably get 6 rate hikes. Now, a lot of people today are waking up and saying maybe some of those expectations were just excessive, and therefore the market has to dial back, and that's what seems to be going on. Yesterday, the US 10-year yield crossed the 4% handle intraday. So the bounce back from the recent lows is also very, very sharp. Then it cooled off. It is below the 4% mark right now. But that's simply telling us about the uncertainty that is lingering in the market. It's all about second-guessing the Fed. The dollar also remains pretty buoyant and elevated. 102.5 on the dollar index last I checked. And we saw the way that played out for a lot of, the global-facing sectors, particularly metals, the cool-off that started trickling in over there. So need to watch for the dollar. Now, what cues or clues did we get yesterday? We had the FOMC minutes out, and the FOMC minutes are saying that, yes, a lot of good work is being done, but you can't take your foot off the pedal. In fact, the minutes went on to say that policy should remain restrictive, while rate cuts are very much on the cards, but policy should remain restrictive till inflation cools. And then you had one of the Fed voting members speak yesterday. This is the Richmond Federal Reserve President, Thomas Barkin. And he said that, yes, there's progress being made, but you can't let your guard down. And, he went on to say that rate hikes are still on the table if inflation does not cool off in a very sustained fashion. So some of this commentary got the market a little nervous, and it really played up. By the way, crude did a bit of a jig last night as well. It was up about 3% in overnight action, about 78, 79 again on Brent. There are supply disruptions in Libya. Some protests have broken out. Some fields have shut down over there. And the Red Sea issue continues. More talks about, some possible attacks on ships, etc. So crude is a watch point. For the Nifty, we are not able to hold on to lows, and that's the issue with the market. And we're actually seeing a sell on every small bounce. So the nature of the market has changed in the last 1 or 2 trading sessions. But I mean, it could turn on a dime again. Nothing is forever. But for the timing, the market is not a buy on dips. It's become a bit of a sell on rally market. And there's lack of any strong support. The 2 big pillars of the market are not working, neither IT nor banks. Can that change today? Can these sectors start offering some sort of a ground, some sort of a floor? In terms of levels, I'll look out for the lows because, we've been breaking lows on a daily basis. So 21,500 was the lowest point the Nifty hit yesterday. The 20 DMA is coming in around 21,300. So now let's see how things go from here on. But I guess it's going to be a little shaky, at least to start with, Nigel.
Well, I think the key aspect here is the overbought sentiment becoming more moderate. We were just running along on a day-to-day basis. The Nifty was just moving up. Mid-caps were flying away. So I think that's getting a little bit moderated, which isn't such a bad thing. It could be a healthy thing in the time to come. Now, overnight, you have this uncertainty on the quantum and the timing of the rate cuts. So that's a bit of an issue, and that's what could keep global equities a little bit subdued. The onus for me is going to be on the Nifty Bank. Even yesterday, the Nifty Bank actually was a relative outperformer. You'll have IT and metals that will be reacting to the US bond yields, the timing of the rate cuts as well. So the onus is on the Nifty Bank to come in there and bat for the bulls. The mid-caps, yes, they've outperformed, but the sustenance of this kind of a performance is something that I'll be looking at because you can't have the headline index see, too much of weakness and mid-caps continue to outperform. Though there are pockets of the market that are looking quite frothy, there's another part of the mid-cap space that's still looking pretty attractive and they have a good theme playing out for them. So be very selective from the mid-cap space. Last few sessions, if you just look at it, Nifty is making lower lows, which is sometimes a bit of a worrying aspect. And the FIs from being very aggressively net long, now in fact they're adding some short positions. Closer around 7,000 short contracts is what they added yesterday. And that's why the short positioning from around 30%, it's moved to around 34% approximately. And the net long positioning as well. I recall a few sessions ago, it was at around 80,000 odd. And we were mentioning you don't want that number to run away to around 100,000. Now the net long positioning has come down from around 85,000 contracts to around 70,000 contracts. Mind you, this is good. You don't want the markets to get lopsided on one side with the long positioning moving to that 90,000 or 100,000 odd. So some shots in the system, actually it could be a blessing in disguise. The PCR normally we have seen, it bottoms out at around 0.65 to around 0.7. Now it's come down from around that 1.2 odd mark to around 0.76. If today you see aggressive call writing, we could get to that sub 0.7, which if that's the case, intraday, the market becomes a bit of a buy on dip market, just on an intraday basis. Because when the PCR does an excessive move towards 0.65, 0.7, history tells us that yes, we do see a bit of a bounce. And why did the PCR come down? Because you had aggressive call writing, 21,600 call, 21,550 call. Between them, they added closer on 2 crore shares, which brings us to the levels. The recent high is 21,834. So on the upside, going by the options data, 21,700 call as well was fairly active. 21,750, 21,800. That's a crucial resistance zone. On the downside, since the 21,500 put has the highest open interest on the put side, the premiums 50 rupees are there. That's the near-term support, 21,450. If that breaks, then you're looking at the 20 DMA. So that should be the important mark for today's trading session, 21,450. The Nifty Bank yesterday it went ahead and it broke that 20 DMA on an intraday basis. But by the time we ended up, it actually conquered that. So the Nifty Bank, the onus is on it. If the banks are going to be delivering very good earnings growth, we have seen more than 1,000-point correction from the recent peak. That's a 2.5% correction on the Nifty Bank. And maybe IT and metals could be under some pressure. So the onus is on the Nifty Bank to bat for the bulls. I think intraday, if you see a bit of an intraday dip just for the day, that could provide a trading opportunity on the upside.
Okay, well, lots of individual stocks in focus because of their updates as well, right? I think Bajaj Finance could be one of the stocks of the day. The AUM has actually crossed 3 lakh crores for the first time ever and very strong growth of almost 35%. More on that later, but in the meantime, let's also get you through to some opinion this morning. Vikas Jain of CLSA says that the Indian equities have started 2024 at near record valuations versus debt. Extreme bullish sentiment as per their proprietary India Bull Bear Index and extended absolute valuations to its own history as well as relative premium to peers. He says with 6 Fed rate cuts expected in 2024, He senses a near market consensus on a perfect soft landing for the US. Vikas says the rally after recent state elections also appears to have baked in a third term for Prime Minister Narendra Modi. Their quantitative analysis suggests a need for the Indian 10-year bond yields to cool off by over 100 basis points and bond equity valuations to sustain well over their historical average to get more returns than the cost of equity. He also says banks, insurance and energy are their key overweight sectors while they remain underweight on IT and consumption.
Okay, near perfect landing. Like that phrase, and I think that's what more of the concern also is. Anyway, let's move on to some money market views now. On the rupee, Pankaj Chitlangia of First Basis says FOMC minutes didn't reveal any meaningful discussions on when to start lowering rates. The probability of a rate cut in March dropped from 90% a week back to close to 70% now, resulting in a relief rally in the dollar index. This rally is likely to be short-lived and capped at 102.80 and gradually move back towards the 100 mark on the DXY. However, this will keep USD-INR pair in a mild upward bias for the short term, with resistance at 83.55 and support at 83.15.
And on the bonds, Parul Mittal Sinha of Standard Chartered Bank says that the India rates continue to remain range-bound with a slight upward bias due to high global rates and more than expected Q4 state borrowings announcement. She also says that overnight rates continue to trade near the MSF rate as liquidity remains tight despite the announcement of VRR auctions. She sees normalization of overnight rates by the RBI through sustained VRR auctions as a key trigger for the rates market. She expects the 10-year benchmark bond yield to trade in a range of 7.15 to 7.25% in the very near term.
Well, we have a lot of stock-specific action to track for you. We get to that in just a bit in our special Top 10 segment. But for the time being, we run you through the list. Looking at Bajaj Finance, Vedanta, IndusInd Bank, Ujjivan Small Finance Bank, IEX. You have Chambal Fertilizers and Dr. Reddy's. All of them will be reacting to positive news flow. On the flip side, Bharat Forge, SAIL, PGR Energy could be reacting to negative news flow.